Welcome to the Property Mindset Podcast, where we dive deep into the journeys of successful individuals in the real estate industry. Our guests share personal experiences and valuable insights, providing practical tips and tools for your own real estate journey. Whether you're an inspiring investor, a seasoned professional, or simply someone who loves real estate, this podcast is for you. So join us on an engaging and informative conversation with some of the brightest minds in the real estate industry. So welcome back to the Property Mindset Podcast with me, Phil Gadd, and First Tracks Real Estate Group. Today, I'd like to introduce back Rob Bain, mortgage professional. We're going to talk about interest rates and house prices. And should you wait till the interest rates come down, or should you buy now? And I'm sure we're going to get some very interesting results from our conversation. So make sure you listen until the end.
Awesome. Thanks, Phil. Really appreciate that you have me on the podcast again. It's always great to be here. Always great to join you to chat about these topics.
Yeah, like we jumped into it the other day, just off air and on a phone conversation. So I thought it'd be a great topic to give some value to our viewers. So a short break from our show sponsor, eXp Luxury, at First Tracks Real Estate Group. Imagine a real estate experience where your luxury property isn't just seen, but showcased, both locally and globally. eXp Luxury is about more than transactions. It's about transforming how high-end properties reach the market. With a blend of unparalleled global exposure, cutting-edge marketing strategies, and an elite network of professionals, eXp Luxury ensures your property stands out in the luxury market. Phil Gadd and the First Tracks Real Estate Group leverage his platform to elevate your listings, ensuring it reaches its full potential. Welcome to the new standard in luxury real estate.
Yeah, for sure. And you know what? It's a huge question out there right now that I think lots of clients are asking me. I'm sure you're getting it from lots of clients as well. And maybe even some folks are thinking about it, but not sure what to do. So maybe first, let's jump a little bit into what we're seeing for rate predictions right now. And of course, I follow a lot of articles online, trends, those types of things. I'm by no means an expert on predicting interest rates, but there's lots of people out there that are, lots of economists, lots of other really smart, well-educated individuals in that area. And when I follow them and I watch what they're saying and look at what they're predicting, we've got the next Bank of Canada rate announcement coming up here on June the 5th. And the following one on July the 24th. Most of those experts are predicting that we're going to see the first Bank of Canada rate cut at one of those two. But if we follow what we know today, we're going to see some rate cut action. We're going to see most likely small rate cuts, but multiple ones happening over the course of the remainder of 2024. As much as we're excited to see lenders' prime rate come down from 7.2, get back down to what we saw in the past of maybe 5% range or something like that, it's going to take some time, right? That's not going to happen all in one Bank of Canada rate announcement. That's going to be hopefully the progress over the next year or two that we see it get back down to that normal level. So that, of course, directly impacting variable rates out there for all those mortgage folks. They have had some elevated rates for the last year and a half or so since prime rate has increased. So I'm sure that's great news for clients out there with that scenario. Now, the other half of it is, of course, fixed rate mortgages. And the important thing to say here is to not really bundle the two together because they're not exactly the same, right? If variable rates in the Bank of Canada announces a 0.25% rate decrease, that doesn't mean that a 5-year fixed mortgage term is going to go down by 0.25% as well. Are we going to see fixed rates come down if the Bank of Canada does multiple rate decreases over the course of the next year? Yeah, for sure. We'll see it come down, but it's not going to come down at that exact same percent that it impacts the variable rates, right? So just want to throw that little caveat of information out there as well, just so that everybody realizes the correlation between fixed and variable rates.
Yeah, that's interesting because what I get a lot is, we're going to wait for rates to come down. And people are thinking, money is going to be cheaper for me to borrow when the rates come down. Now, Is that actually going to be the case?
Exactly, 100%, right? And I've got a great scenario to compare what it looks like now to what it potentially will look like in the future, and then also a third one in there that's a blend of the two. However, one piece I think we should cover off a little bit before that, and perhaps this is an area that maybe you can speak a little bit to, since you're knowledgeable in the Fernie market and the trends as far as house prices and property values go. Like right now, what do you think we're going to see for those property value prices, say, over the next year of time?
For March, the average house price in Fernie was almost 850,000. Lots of homes selling way above $1 million. Properties are becoming expensive in Fernie, as the data is telling us. For what happens in the future, depend on different factors. We have got some bigger rental housing projects coming online. We've already had one online just recently. We've got another 150 units coming online by the end of the year. Will that have an impact on the Fernie market? The higher end of the Fernie market is booming right now. Like I said, properties over seven properties sold for over 900,000 in March, and 3 of those were over 1.5 million.
Yeah, for sure. And I know some clients have that question as well when I'm talking to them about mortgage scenarios. They're like, that's what I saw in the news, is that property values are going to be decreasing. And as hopeful that that happens, I think for affordability, I think it's, again, pretty unlikely that property values are going to decrease enough. If you look at any of the data over the past 6 months or a year, I don't see where in the Fernie market it's coming down.
Yeah.
Right.
I think it's across Canada, we have a supply issue. It's been well documented that Canada needs to build a crazy amount of new homes just to meet demand. To your point, I don't think property values are going to be coming down significantly anytime soon.
Yeah. And that's when you talk about basic economics, right? When there's a lot of demand and not a lot of supply, prices go up.
Yeah.
Right. Yeah. So the scenario here, maybe we'll throw that slide up. We can take a look at that. So there's 3 different scenarios that I have built into here. So this is what we're talking right now, today's conditions. I just used a mortgage amount of $500,000, so $500,000 mortgage. Current rates, 4.99%. That's some of our top lenders out there right now have a 4.99 5-year fixed. Just looking at that kind of base model to see what the payment amount is on that. So at those numbers, a 25-year mortgage gives you a monthly payment amount of $2,905. Now, if we look at scenario 2, we could say that's in 1 year's time. Changes that I put into play there, we've got the rates coming down 0.5%. I think 0.5% change for a 5-year fixed in 1 year's time could happen. I personally think it's a little bit of a stretch for how much rates are going to be impacted, especially for a fixed rate. But just to throw that scenario out there. Now you'll notice the mortgage amount, though, I increased by $50,000 just to show that those property values, I don't think are going to go down, and I don't think are going to stay the same. So if that house that you can buy today and have a $500,000 mortgage on it in 1 year's time, perhaps its value has increased by $50,000. So you need a slightly larger mortgage to purchase that same home. So the mortgage payment on that, lower rate, $50,000 higher mortgage, payment's actually about $135 more per month for the mortgage amount itself to make that same payment. Now, the third scenario is a little bit of a blend between the two. This is what I see as a more likely outcome. Mortgage amount staying at that same $550,000. So we're saying the property values have went up in 1 year's time. Rate I put at 4.79. So in the middle of the 4.49 and the 4.99. So if rates don't come down as much as predicted, and your actual payment for that ends up at $3,133. So we're talking about a $230 per month different mortgage payment there. Some folks, they look at those mortgage payments and, wow, that's a couple $100, whatever. Over the course of a month, that's not a big difference to me. And I'll agree that's not. But when we look at the other numbers shown on here between those calculations, the one that really should be of more interest to them is what that actual balance is going to be after that 5-year term. So on the first one, we have a remaining balance of $442,000 and change. So that's your mortgage balance after the first 5 years. So started out with a $500,000 mortgage, made those required standard payments, and the balance remaining at the end was $442,000. If we look at the second scenario, $550,000 mortgage, the balance remaining is $482,800. So we're talking $40,000 larger mortgage balance after those 5 years. Why, you might ask? The mortgage amount started at $50,000 higher to begin with because the property value was higher and it cost more to buy it.
Yeah.
Sure, the rate was lower, but you're still paying more for that mortgage over that time frame. And then same with the third scenario, slightly higher than that as well. If that price of the house goes up, yeah, your mortgage is going to go up and you're going to be paying more and you're going to have a larger balance after the 5 years.
That's the thing. And that's why it's always recommended that you go and speak to the professionals, get some expert involved on your team when you're looking to get into purchasing property, because if you're not looking at the bigger picture, can have quite significant results at the end of the term of the mortgage. So it's always critical to make sure you're talking to someone like yourself and making sure you're looking at the bigger picture, not just thinking, oh, I'm going to wait until rates come down because it's going to be cheaper. Yes, it may be cheaper for you on a monthly basis, but yeah, you're right. Property prices are not going down. In the Fernie market, if we look at the graphs I do every month, I think 21 to 22 up 13%. This is from memory. 22 to 23, 13, 14%. 23 to 24, currently, it's up at the high 20, I think it's 29%. So at the moment, as of January to March, the average house price in Fernie is high 20% higher than it was in 2023. And will that remain the course of 2024? Right at this moment in time, the average house price is considerably higher than it was last year.
Yes. All great points. And the best piece of advice that I give clients when they ask these questions is it's hard to say when the perfect time is to buy a home. It's tough to time that market just like it is with an investment. And really everybody's situation is unique, right? It depends on where they're at with their overall finances. Are they ready to buy that first home? Are they ready to sell and buy their next home or whatever their scenario is? Don't base it solely on rates because you only get a rate for 3 years, 5 years, whatever term you pick. And you're so focused on that interest rate. But there's still 20 more years of mortgage interest rate. And we can't possibly know what the future is going to bring to hit that rate and to make it better or worse. So it's one of those things where, like you say, house prices, if we look back, way back 20, 30, 40 years, property values over that time frame definitely have come up, right? Yeah. Just like everything. Everything goes up in cost. That's the basic inflation principle and economies, right? The value of money changes over time. We know those numbers are going to increase. The best thing to do is evaluate your situation, talk to an expert. I'm here to help. I'd love to chat to you if you're a client, if you're looking at getting a mortgage, if your mortgage is coming up for renewal or you want to do a refinance, it's the exact same scenario. I'm here to answer those questions. I'm here to help you understand your mortgage options. No pressure. I always give honest advice. Sometimes that means that I don't help the client and they go to their bank where their mortgage is at because that's the best scenario for them, and that's fine.
So yeah, I think that's the moral of the story here is, what's the saying? Marry the home, date the rate, or something like that. Is that right?
Yeah, I've seen that quote, and that's exactly what it is, though, because you're going to have the house for 10, 20, 30 years, however long you want to have it for. But the rate, you only get that for a certain period of time.
Yeah, that's it. And if it's a long-term investment, it's worthwhile getting all the expert advice you can from people like myself, from people like Rob, and Rob's details will be below this video. So if you want to reach out directly to him, go ahead. He's helped many of my clients with great success. Ultimately, you need to tell us what your motivation is. We can't help until we understand that completely. And then once we do, we can help you to the best of our ability. Yeah, that's fantastic. Rob, thanks again for coming online and chatting with us again. I really appreciate it. Lots of great value as always. And like I said, anyone wanting to reach out to Rob, All his details will be below this video or in the podcast notes, depending on what platform you're listening to.
Awesome. Thank you so much, Phil.